The US bond market is worth almost $40 trillion, a financial beast worth over $10 trillion more than the entire equity market. And whether you realize it or not, bonds most likely affect your life. The price of long-term bonds can shape the cost of many people's mortgages. Many of your pension funds invest in bonds, so market returns can even influence just how much you receive when you retire. And according to economic historians, you can trace at least some of the roots of the modern bond market all the way back to 14th century Florence. Florence at the time was drowning in debt after going to war with other city-states across Italy. The people of Florence were forced to loan money to the state. In return, the state offered them interest on those loans to compensate them while they waited to be repaid. There was one further important defining characteristic. If a citizen needed cash, they could then sell their agreement with the state to other citizens, creating, if you will, a market for Florence's debt, and with it, some of the foundations for what we see today. Today, of course, no one is actually forced to buy bonds. It's a voluntary investment strategy. Here's roughly how it works. Imagine company A needs to borrow some money to expand, say, its operations or buy another company. Investors lend the company money in return for interest payments. The size of those payments can depend on the risk profile of the company and the time period they agree to before they're paid back. Issuing debt could afford company A some lower interest rates than if they just took a loan out from, say, a bank. At the same time, it can provide investors with a stream of predictable interest payments and an investment that they could go and sell in the open market if they wanted to other investors. It's not just companies that issue debt. The bond market allows countries and states to tap a huge market of investors to cover budget deficits by issuing what's called sovereign and municipal bonds. So whoever said money makes the world go round, well, they're wrong. It's dead.